S&P at all-time highs, NASDAQ at all-time highs, New York Stock Exchange Composite at all-time highs. So why is everyone so bearish? I'll show you what they're missing. The real rotations under the surface, how to time it with the breadth and volume, and the exact setups I'm trading this week. If you want leadership and a plan, not just narratives, stick with me here. People keep calling this a broadening market. It's really not. It's just rotation inside of cycles. Let's think of two buckets here. If we jump over and take a look at ASOX, which is just the AI semiconductor complex as a whole, and if we compare it to ESOX, you can see here that ASOX has clearly been outperforming. But if we break it down a little bit and zoom in a little bit more, you can see that the ESOX, the equity breadth or the equal weight index, has been outperforming the shiny AI leaders. This doesn't mean that it's risk off completely. It just means that the bid is moving. Your job isn't to predict where it's going to land. Instead, your job is to see it and pivot. We're not in a rising tide regime anymore. This is feast or famine. If you're in the right names, you're going to feast. But if you're in the wrong names, it's more like a famine. It's the same index, but you're getting opposite outcomes. Let's look at the bull bear spread and why we're not frothy. Let's kill the froth narrative here by looking at the bull bear spread. As you can see, we're taking a look at the bull bear spread composites all the way back to the late 80s when they started this. The recent bearishness down here in April was worse than the pandemic trough on some measures. Today, we're not even net bullish on a spread basis. We're below zero. As you can tell, I have this white line here to show you guys zero. Well, as close to zero as I could get it, just to make it easier to see for you guys. What historically happens after these kind of extremes is in the 90 to 95 window back here, you got years of upside with periodic panics. Same setup as now, all-time highs with disbelief. The key concept here is time frame. When we talk about this kind of stuff, we're talking secular. Secular means years. It's not cyclical, which is months, or strategic, which is weeks, or even tactical, which is usually days. Most people blow up mixing them. People will look at this and think that we're going to be bullish tomorrow and go to the, or bullish on Monday and go to the moon, and we're just going to be off to the races. Everyone's going to buy. That's not how these kind of things work. Think of this as a cargo ship. It takes a long time for this stuff to move. Something else to look at on this bull bear spread chart, if we look at these dips down here, or these troughs, they all ended up being really good buying periods. So let's keep that in mind. Take a look at the breadth and the volume that actually guides entries here. The NYSE up vol minus down vol and the advanced declines are my steering wheel usually. Opportunity clusters at extremes. I have a tactical rule that I can give you guys. If you're struggling with longs, require an up volume day before you add risk. It's dumb, but it's simple, and it's brutally effective. Right now, we're below the zero line. Here again, I put this white line as close to zero as I could get it for you guys to make it easier to see. But right now, we're below the zero line on the, let me jump to the weekly here. It might be easier to see. Right now, we're below the zero line on the weekly up minus down vol, and AD lines are nearly buyable zones that have led to bounces since 2023. What does this mean? Internals aren't euphoric. If anything, they're setting up another push after a reset. It's quite different than what you're hearing in the media or a lot of people talking about on TV or wherever you get your information from. It's really helpful if you can block out that noise, and honestly, some of it's just propaganda even. And take a look at the data more closely. It'll help you out a lot. Seasonality isn't really my thing, but October and November often reward dips. Let's not predict this. Let's let the data trigger us. I mentioned earlier that the market's in more of a rotation than a euphoric or everything up regime. So let's take a closer look at that. Correlation is at multi-year lows. The index is up, but your stock probably isn't up. This is a feast or famine market, as we mentioned earlier. Semis aren't one trade. Memory versus storage versus networking versus compute rotations are on sequential growth. If sequential slows in leader A and accelerates in B, the flows will switch. Right now, it's all about memory and storage. That's the rotation right now. As you can see, NVIDIA is just sitting here, not at all-time highs. But if you look at things like Western Digital, Seagate, Micron, some of this stuff. All these memory names are on fire. They can't get in them fast enough. Western Digital's at all-time highs, Seagate's at all-time highs, and they're showing no signs of slowing. Hyperscalers need memory. The data centers need memory. All of this AI stuff needs memory. That's where the money is right now. The ETFs also amplify this. With more ETFs than stocks, passive rules crowd the same winners. The trick is to own what the ETFs are forced to buy next, not the stuff that they're going to be exiting. If we take a look at NVIDIA versus AVGO versus Oracle here on this chart, you can see that Oracle and AVGO have been way outpacing NVIDIA recently. Why is that, you might ask? NVIDIA's data center growth pace has slowed sequentially. It's still elite, just less acceleration. Underperforms versus the hype windows. Oracle's sequential growth over quarter has been crazy. That's why you see it outperforming so much right now. AVGO's AI semi revenue reaccelerated, which is also why Broadcom accelerated. They got paid. The Oracle headline EPS was a miss by a penny, but that was irrelevant. The cloud infrastructure line reaccelerated. Backlog absolutely exploded. The street had modeled low 30s for the sequential growth, but the print came in at the mid 50s. That's why the stock dipped originally and then ripped. Institutions pay for durability and visibility. If you want to learn more about reflexivity and how we use it in our trading, head over to asymmetricedge.org and get your name on the waitlist. The next round of invites will be going out later this month, and make sure you're on there. We talked about this ETF effect earlier, and I think something that can help you guys is taking a closer look at a real life example. If we take a look at these space flows, such as RKLB, and we compare it to its peers like ASTS or UFO, which is just the space ETF, you can see that RKLB has been way outpacing ASTS and the ETF itself. Now, why is this? Because when a theme catches a bid, the ETFs tilt into the liquid leader, which is RKLB, which then starves the second tier names such as ASTS. So here you don't want to buy the basket, such as UFO, or even the second tier names. You just want to buy the leader. Concentrating in the leader will allow you to outperform the market and the entire sector. We've also seen a couple hot themes lately, such as Octo, BMNR, ASST. All of these names are getting sponsorship hype. Sponsor hype pops the NAV linked products. They always return to the NAV eventually, though. The money is made in buying the discount, not chasing the press release. We've had some killer trades in the community lately. This Micron trade was probably the most beautiful trade I've seen in a while. We were eyeing this 130 level, and we called it down here last week on Thursday when we saw this big green candle, and we were looking for the continuation higher, so we started our position back here. It's been on an absolute tear. We called out this 129 to 130 level in a market recap video last week. We also posted about it on Twitter. We couldn't have asked for a better trade here. It's just free money now, and we're just letting it ride. Now, what's our typical day look like in the mornings? We map out our SPY and QQQ prior day high and lows because those are really important levels. Also, the previous close and the day's open are important levels that we keep eyes on. We anchor our VWAPs to the open, and sometimes we leave the previous day VWAPs on because it's nice to know. We also have our weekly levels mapped out. We have a breadth dashboard up with the upfall and the downfall, the advanced decline line trend, and our 20, 50, and 200 MAs on. Now, what kind of setups do we actually take? We like to take VWAP reclaims long. What do I mean? We go to Friday on the SPY. We opened up. We were above VWAP. We came back down below, and then we reclaimed, retested real quick, and we never tested again. This is exactly what I mean. Comes on, breaks under VWAP, comes back up and reclaims VWAP with confirmation with the retest and hold, and it's just a beautiful, it's easy trade. Then the rest of the day, you just use VWAP as your stop all day long. But at the end of the day, Friday, if you kept your stop at VWAP, you got taken out. But that's fine. I'll take that all day. We got a $3 trade here. And we never had to worry about it. We never had to think about it. As soon as it reclaimed VWAP with confirmation, we put the trade on, let it ride all day long, kept our stop right at VWAP. No worries. Cashed out. We also like to trade opening range breakouts and VWAP alignments. So if we look at Micron, we drop the VWAP in. And if we map out the opening range here, you can see we came up here, bonked, just kind of chopped around, came back up, got over it, but we kind of just fought at this opening range level. But once we confirmed above it, we went long. Again, VWAP's going up. You can just use VWAP as your stop, or you can even use the top of the breakout range. Depends on your risk. But as you can see, it was another trade we didn't have to worry about all day long. We just let it ride, and the trade's still on. We can take a look at Oracle for two other types of trades that we like to take. On their earnings, let me clear this chart off. On their earnings, we saw that their sequential growth was massive. So on this dip, let me break it down a little more for you guys. On this dip, we saw that their sequential growth was huge. So what we did is we marked off the day's close. It dipped below it, and when it came back above it, we got in. We used our anchored VWAP right here on the release of the news, and all we did was use this as a stop. It never even came back to get close to it. It was just an easy trade. We let it ride, and it was a massive trade for us in the community. Another trade we can look at with Oracle because it sold off so hard. Another trade we can look at with Oracle is the earnings sell to news gap fill. Something else we like to do on earnings plays is keep an eye on that day open. We mark that level, and we like to keep a VWAP on that day. As you can see, the first day after earnings was easy, but after that, we broke that VWAP. We didn't want to put the short on yet because we wanted to wait till it retested. As you can see, it retested again right here, and it broke. We started our short position here once it rejected the earnings VWAP again, and we kept a close eye on that earnings day open. You can see it broke with ease, so we put our full short on here. We watched the retest of it, and it rejected again, and we've been short since. Our full short position was put on here once we broke the earnings day open. It's been an easy trade, and all you have to do is just move your stops down as the stock goes down to whatever you're comfortable with and whatever your risk tolerance is. Ideally, we'd like to look for a gap fill all the way back down to here. I don't know if we're going to get that. So just move your stops down, manage your risk. Something else I think can help you guys is having a risk framework. Size off of your stops, not the P&L you want. Meaning don't chase massive P&Ls. Stay true to your size of your account and know the risks that you're willing and able to take. One trade can be wrong, but the series must be right. If you're using options or if you're new to options, try using defined risk debit spreads around implied moves. It's a lot easier, the moves aren't as crazy, and you have a set amount of risk. You're not going into it with naked calls, naked puts, selling naked calls, or all this craziness and having unlimited risk. Just start with something easy like debit spreads. What ends this party and what doesn't? Euphoria ends parties, and we're not even close to being there. When we looked at the bull and bear spreads earlier, you could see that clearly. When the bull bear spread screams euphoria and the up volume rips at extremes for weeks, that's when I'll cool my risk, but we aren't even close. You always have to keep in mind though that one tweet can knock the tape, but it doesn't change drivers. I'll change my mind when the sequential lines roll over again. I'm going to be keeping my eyes on a few things this week. This week, I want the leader in each theme with accelerating sequentials. I want clean VWAP reclaims or VWAP alignments. I want the breadth not rolling over further on a weekly basis. If we get a breadth flush first, I'm adding into the leader names at my levels. But if we rip first, I'm trading continuations with tight risk. If you want even more names to go over and more levels, we do all this in the community every single day. I trade live. I answer questions live. There's Q&As. There's all kinds of stuff, and there's just a great community of people. So if you want to be a part, head over to asymmetricedge.org and get your name on the waitlist for that next round of invites. Those invites should be going out at the end of this month, and you don't want to miss out because I don't know when the next invites will be going out after that. Also, the invites going out right now are still the founding member invite prices. After that, they'll be going up. There's also a few spots open for lifetime membership options. So if you're interested in that, head over to the website, get your name on the waitlist, and shoot us an email. Thanks again for watching. If you find this kind of stuff helpful, share it with a friend, or leave a like, leave a comment, and subscribe. It helps me out greatly. Thanks again. I'll see you in the next one.